Hey guys, welcome back to the YouTube channel. My name is Mayor Aurora and I create finance related YouTube videos to help educate all of you out there and become more financially savvy. A while back I used to work as a federal US economist supporting the public sector and the United States government, specifically at the Department of Commerce. And although the market may have changed, I aim to really leverage my experience to help you make more rational financial decisions in your lives. So there's this concept of passive income, which has become a very sexy buzzword, and really what that means is people are trying these days to get money by really doing nothing. And in today's video we're going to cover exactly that, making money by doing nothing. So all jokes aside, I'm going to cover something called dividend stocks in this video, and these are stocks that essentially pay you a dividend or free money simply by holding these entities in your portfolio. We explored my top 5 ETFs in another video. In today's video we're going to look at our top 3 recommendations for 2024 for dividend stocks. So at the top of my list is a company called Exxon Mobile. Why Exxon Mobile? To begin, Exxon Mobile is a dividend aristocrat, meaning it's a company that has been consistently paying dividends for 25 years or more and has consistently been increasing their dividends over time. Secondly, Exxon Mobile is one of the largest publicly traded international oil and gas companies with a significant global presence. This allows it to capitalize on opportunities worldwide and mitigate risks associated with specific regions. The company's operations span upstream, meaning exploration and production, as well as downstream, such as refining and marketing, providing a balanced exposure to various segments of the energy market. This choice is also interesting because ExxonMobil also tries to stay ahead of its competitors, and this can be seen by one of its recent investments by acquiring Pioneer Natural Resources. And this happened earlier this year, which signifies dedication and commitment to 1. Hydrocarbon exploration, and 2. Actively staying ahead of its competitors. So today ExxonMobil provides a dividend yield of 3.22%. If you want to calculate how a stock's dividend payout would look like, first we see the share price in this case, which is $118.17. Then we see it pays quarterly, meaning 4 times per year. Since the dividend percent is 3.22%, the calculation would be 0.0322 times the share price of 118.17 divided by 4. So you can see the payout is dependent on really 3 main things: the dividend percentage, the share price, as well as the number of payouts per year. So the message here really is that just because a stock has a high dividend percentage doesn't necessarily mean that it is the best stock to choose. So I wouldn't just look at dividend percentages when making your investment decisions. You also want to consider the other factors, as I mentioned earlier, such as the stock price as well as the number of payouts per year. So second on this list, we're going to look at General Mills. This company is known for its popular brands such as Dunkaroos, Lucky Charms, and even Haagen-Dazs. This stock pays a dividend yield of 3.48%, and the reason why I picked this choice as number 2 is really 3 things. So the first thing is it's consistent in its dividend payments. General Mills has been paying dividends for over a century, demonstrating its commitment towards returning value to its shareholders. And in addition, this company has a track record of gradually increasing its dividend over time. This growth in dividends reflects the company's ability to generate steady cash flow and its focus on rewarding shareholders. Secondly, it's recession resistant, meaning as a major player in the consumer staples sector, this company, General Mills, produces essential goods that are consistently in demand, regardless of the economic cycle. Its innovation and growth make it a very good choice, as it continues to innovate by introducing new products and expanding into healthier food categories, which can possibly drive future growth, which can really support continued dividend payments and potential increases over time. So recently, General Mills has seen some volatility in its stock, and this is primarily due to decreased consumer spending, which has hurt recent results. However, for a long-term investment, this may be a good choice for you. And last but not least, we're going to look at Pfizer. Ever heard of the controversial yet economically stimulating COVID vaccine? Yes, it's that Pfizer. So Pfizer is one of the leading manufacturers in this vaccine and provides a dividend percentage of 5.94% for its investors, which is quite high compared to its competitors as well as some of the other stocks stocks within the S&P 500. In addition, Pfizer has in its portfolio medicines for immunology, oncology, cardiology, and more, meaning its commitment to diversifying and staying ahead of its competitors is definitely there. Pfizer is also one of the largest pharmaceutical companies in the world with a diverse range of products across various therapeutic areas. Its portfolio includes blockbuster drugs and vaccines, which generate significant and steady revenue, and its commitment to research and development ensures a pipeline of new drugs and therapies, which can really further drive future growth and support long-term profitability. This innovation is really key for Pfizer to stay ahead and create even more dividend payments in the future. Despite taking a hit in its stock price, Pfizer has been raising its dividends for years, indicating its commitment to shareholder value. And in addition, compared to the other stocks mentioned in this video, we see that Pfizer's price is considerably low, so it may be a good choice in terms of buying the dip and potentially realizing some gains in the near to medium future. So what are the takeaways here with dividend stocks? The first thing is that there's long-term potential as well as possibility of steady passive income. If we look at the long-term growth potential, many companies increase their dividends over time, which can enhance your income and total return. Investing in companies with a history of dividend growth can also indicate financial health and long-term profitability. Secondly, regarding the steady income stream, dividend stocks provide a reliable cash flow and regular income stream to you, typically on a quarterly basis, which can be reinvested or used for living expenses. It's super attractive for retirees or those who are seeking, again, passive income. However, there are some risks to consider with dividend paying stocks. There's dividend cuts, there's interest rate sensitivity, and there's concentration risk. So in terms of dividend cuts, if a company faces financial difficulties, it may reduce or eliminate its dividend, leading to potential losses for investors relying on that income. In terms of interest rate sensitivity, these dividend paying stocks, particularly those with high yields, can be sensitive to changes in interest rates. And thirdly, with concentration risk, relying too heavily on dividend stocks in certain sectors can expose investors to sector-specific risks. So it's super important to diversify across different industries. And what that means is you should hold different types of dividend-paying stocks in your portfolio that match different industries, for example, healthcare, technology, or perhaps even energy. So in conclusion, you can see that dividend-paying stocks are a great investment for possible passive income. Simply by buying a big-named company and holding it in a portfolio can definitely increase your portfolio's value over time. But please remember to invest carefully, and my recommendations may not necessarily suit your needs, but these are the ones that I would choose if I were in your shoes today for 2024. A well-diversified dividend-paying portfolio can definitely generate you long-term growth over time, steady passive income, as well as diversifying your risks. So if you really enjoyed this video and you learned something new in terms of dividend-paying stocks, then please hit the subscribe button, as well as if you could like the video, that would really help me out. Nonetheless, I appreciate you watching, and I'll see you in the next video. Take care, guys.